Today's financial markets are experiencing notable volatility, with significant movements impacting various sectors. From NVIDIA's rise to Broadcom's sharp decline, the landscape is shifting rapidly. Here are today's top 10 stories you need to know. Apple Inc., a cornerstone of the technology sector, has experienced a slight decline of 0.57%, now trading at 145.32 cents. This minor dip may seem insignificant on its own, but given Apple's substantial market capitalization, it carries implications for broader market indices. Analysts often note that when Apple underperforms, it can weigh heavily on major indices due to its passive weighting in index funds. This recent movement suggests a cautious investor sentiment surrounding tech stocks, especially as the market navigates through mixed signals. With Apple's performance being closely monitored, its future trajectory will likely influence the broader market sentiment. Investors are now looking for signs of resilience or recovery in Apple's stock, which could stabilize market anxiety. As the market continues to grapple with uncertainties, Apple's next earnings report will be critical in assessing its impact on the tech landscape. Observers will keep a close eye on how Apple adapts to changing consumer trends and technological advancements. Exxon Mobil has seen a decrease of 1.00%, bringing its stock to 108.22 cents. This downturn in energy stocks signals potential challenges for the energy sector, particularly regarding inflation-sensitive positions. The decline in Exxon's share price could influence investor sentiment, leading to a reevaluation of energy investments. Historically, energy stocks have played a crucial role in economic recovery, and their underperformance can raise concerns about inflation pressures and broader market stability. As energy prices fluctuate, the overall sentiment in the market could become more cautious. Analysts are now questioning whether this trend indicates a longer-term issue within the energy sector or merely a temporary setback. Investors are likely to pay close attention to upcoming earnings reports from Exxon and its peers, as these will provide insights into the sector's health. The situation is evolving, and market participants will be watching closely for any shifts that could impact energy pricing and economic forecasts. Tesla's stock is down 2.35%, now trading at $331.42. This shift is particularly noteworthy as Tesla is considered a high beta bellwether for growth stock risk appetite. When Tesla's stock weakens, it often pressures sentiment across the broader spectrum of speculative growth stocks. Investors are now questioning whether this decline reflects broader market concerns or specific issues within Tesla's operational framework. As the electric vehicle market continues to evolve, Tesla's performance will be critical in determining the trajectory of other growth-oriented stocks in the market. The company's upcoming production and delivery reports will be pivotal in assessing its market position. Analysts will be watching for potential catalysts that could reignite investor confidence in Tesla, especially as competition in the EV space intensifies. The market's reaction to Tesla's performance is likely to influence how investors approach growth stocks in the coming weeks. Broadcom has experienced a notable drop of 12.47%, bringing its stock price down to $419.11. This substantial decline positions Broadcom as a significant indicator of single-stock risk events currently affecting the semiconductor sector. The drop has raised alarms about the overall health of the semiconductor market, particularly given its implications for expectations surrounding AI infrastructure. Analysts are now closely examining Broadcom's recent performance to determine whether this decline is indicative of broader market issues or specific challenges faced by the company. The semiconductor industry is vital for technological advancement, and significant stock movements like this can shake investor confidence across the sector. As major players in technology rely on semiconductor components, stakeholders are likely to demand clarity from Broadcom regarding its future outlook and strategies to navigate this turbulent environment. With the semiconductor landscape undergoing rapid changes, upcoming earnings reports and strategic announcements from Broadcom will be critical for investors seeking to gauge the company's resilience and adaptability. NVIDIA has emerged as a significant leader in the market, with its stock price rising by 2.68% to $220.66. This upward trend underscores NVIDIA's role in driving the AI capital expenditure trade. The company's performance indicates strong institutional interest, as evidenced by heavy trading volume that supports its bullish outlook. Investors are increasingly betting on NVIDIA's potential to capitalize on the AI revolution, leading to a differentiated perception within the semiconductor space. As the company continues to innovate and expand its product offerings, analysts expect its leadership to further solidify in the coming months. The broader market is now keenly observing NVIDIA's developments and strategic moves, as these could ripple across the tech sector. Investors will be particularly interested in NVIDIA's upcoming announcements regarding AI product advancements, CESC, which could further influence market sentiment and investment strategies. The momentum behind NVIDIA suggests a growing recognition of its pivotal role in the future of technology. Marvell technology has outperformed expectations, registering a notable 4.56% increase to 315.69. This rise not only highlights Marvell's individual success, but also demonstrates that the semiconductor complex is increasingly characterized by investor differentiation. Unlike the past, when the sector moved in unison, today's investors are adopting a more selective approach, focusing on companies that exhibit strong growth potential and operational effectiveness. As industries such as automotive, artificial intelligence, and cloud computing continue to drive demand for semiconductors, companies like Marvell are well-positioned to capitalize on these trends. Analysts emphasize that Marvell's innovative product offerings and strategic partnerships will be critical in maintaining its competitive edge. The company's ability to sustain this upward momentum is vital for shaping broader investor sentiment within the semiconductor sector. Looking ahead, stakeholders are keenly observing how Marvell will leverage emerging technologies such as 5G and edge computing to enhance its growth trajectory and solidify its position as a market leader in the dynamic semiconductor landscape. Meta Platforms and Alphabet have demonstrated resilience, with Meta's stock increasing by 0.64% and Alphabet's by 0.93%. This performance suggests that investors are still willing to support large-cap tech stocks, particularly those involved in AI and data-driven platforms. The positive momentum in these stocks contrasts with the mixed performance seen across other mega-cap names, indicating a selective leadership within the technology sector. Meta and Alphabet's stability is particularly notable in light of broader market uncertainties, as they continue to attract investor interest based on their cash-generating capabilities. Analysts suggest that this selective strength may reflect a shift in investor strategies towards companies with robust growth potential and sustainable business models. As the digital landscape continues to evolve, stakeholders will be keenly observing any announcements from both companies that could further solidify their market positions. The future trajectory of these tech giants will be pivotal in determining the overall health of the technology sector. International markets are exhibiting mixed sentiment today, with European indices showing relative firmness while Asian markets are struggling. The DAX in Germany is up 0.75%, and the S&P ASX 200 is up 0.53%. In contrast, the Nikkei 225 has dropped 1.45%, and the TSX has fallen by 0.51%. This divergence reflects varying economic conditions and investor sentiment across different regions. European markets appear to be buoyed by optimism surrounding economic recovery, fueled by strong corporate earnings reports and easing inflation concerns. Meanwhile, Asian markets are grappling with multiple headwinds, including rising interest rates and lingering supply chain disruptions, which may dampen growth prospects. Investors are increasingly focused on geopolitical tensions, particularly related to trade policies and regional conflicts, as these factors could significantly impact international trade and investments. The mixed performance highlights the necessity for investors to adopt a nuanced approach, analyzing not only local market conditions, but also global developments. Looking ahead, market participants will be closely monitoring upcoming economic data releases and geopolitical developments that could shift sentiment and influence market trajectories in the coming weeks. The current market environment indicates a rotation beneath the surface rather than a clean breakout trend. This shift highlights the importance of stock-picking strategies over merely following broad index movements. Strong performers like NVIDIA and Marvell showcase the potential for growth, while stocks such as Broadcom have faced significant losses, illustrating a market increasingly discerning based on individual company performance. This differentiation is particularly pronounced in sectors like semiconductors, which have become pivotal due to technological advancements and rising demand for chips. Investors are advised to focus on relative strength signals as the disparity among stocks widens. The ongoing reaction to macroeconomic factors, including interest rate changes and inflationary pressures, has contributed to this rotational behavior, presenting unique opportunities for those willing to adopt a more selective approach. The evolving landscape suggests that a one-size-fits-all strategy may no longer be effective. Instead, market participants must remain agile, seeking out stocks that not only demonstrate resilience amid volatility, but also possess strong fundamentals. As we look ahead, the ability to identify these resilient companies will be crucial for investors aiming to navigate this complex market environment successfully. U.S. equities are currently showing a mixed performance, with the Dow and S&P 500 experiencing fluctuations that signal potential volatility ahead. The Dow is reported at 51,561.93, having surged by 874.86 points at one moment, only to later reveal a decline of 0.47%. Similarly, the S&P 500 has oscillated between gains and losses, highlighting an active trading environment that reflects investor uncertainty. This mixed behavior stems from a confluence of factors, including fluctuating macroeconomic indicators, corporate earnings reports, and geopolitical tensions that continue to shake investor confidence. As inflation concerns persist and interest rate policies remain a focal point, traders are assessing the resilience of various sectors amid ongoing economic challenges. The volatility in U.S. equities suggests that market participants are recalibrating their strategies, with a particular focus on sectors like technology and energy that have shown stronger fundamentals. As the trading day progresses, stakeholders will be keenly observing any decisive movements or trends that could provide clarity and direction for the markets. This evolving situation underscores the necessity for vigilance as investors navigate these turbulent waters. Looking ahead, analysts predict that the upcoming economic data releases will be critical in shaping market sentiment and could influence trading strategies in the near term. Thank you for tuning into today's financial updates. Which story caught your attention the most? Please like and subscribe for more insights.